Welcome to the second part of the strategy components trilogy. In today's part, we are going to talk about opening a trade, specifically how we add order type to our strategy. But to do so, we first need to know the basic order types and what they mean, what they do. It will be equally important for you to understand the so-called price level calculation. I will explain these concepts rather briefly in this lesson, but if you would like to go into more detail on this topic, you can use the AlgoWizard course linked below this video. Our first order is stop order. Stop order is mostly known in relation to the so-called breakout strategies. These are the strategies where we open the position and we expect the price to break a price level, and when it does, it keeps on going. It means that the market gets some energy, the price is progressing, and what we statistically found out is that when the energy gets to the concrete point and breaks a significant level, for example, monthly high, the price will keep on growing. Just like this. Now let's talk about limit order. As you can see, our chart is a little bit different. The price was developing similarly as before, but after it reached the price level, we expected the price to bounce from the price level and will get back. It means that in this case, the short position will be opened. So the price was shaping and growing to the price level where it kind of bounced back, and so short position was opened. And then we have a market order. Again, the price is kind of shaping, but there's no level that it would have to reach, but there is the time of entering the order. So it means that here is a condition, one of the conditions, for example, that it is 3 p.m. And when the condition is met, we enter the long or short position. Now we are getting to the price level calculation, what it is, and how to calculate this. Simply put, price level calculation is calculation of a concrete level in the market. The price level is any price, for example, close, open, high, low, just any market level price. There is a kind of standard way to calculate price levels for the strategies we are creating here, and that goes most of the time, not every time, but most of the time like this. Price level, so indicator or price, plus multiplier multiplied by ATR, volatility deviation. The second part of this formula, multiplier multiplied by ATR, volatility deviation, causes that if the price is more spread and dynamic, there is no more volatility in the market. This ATR number gets higher and is added to price level. In other words, it means that the price has to break through the higher level in case of higher volatility, and when the volatility increases, the level gets closer and closer to the price level. This formula works very well for almost all strategies, so you will mostly see this formula while building your strategies. And one more thing, if you would choose the exact price level, for example, highest, these levels are, in general, well known by everyone on the market, and very often there are false breakdowns. So the price gets to the level, touches the level, and gets back quickly. After this, it continues again, and this formula can at least partially protect us from it, because as we set the pending order a little bit higher, the price has to get there, breaks the level higher, and then continue. So at this point, you already know the meaning of each order and also the price level calculation. So let's move to AlgoCloud, where I will show you how to set up each of these orders. It will be kind of easy because our strategy uses the market order. If we wanted to use a stop or limit, we simply change the order type, and as you can see, it will automatically show our mentioned price level. Since our strategy uses a market order, no further step is needed. It is only a good idea to set the entry to on bar close. On bar open, we would catch quite a large spread. Possibly, we could catch a large spread. If you would like to work with a limit order, clone the mean reversion short strategy that we have in our example strategies, because it uses this kind of order. You will not find a strategy that uses a stop order in our strategies, but it works just like a limit order, just much more prone to slippage. This is also one of the reasons why limit or market orders are our favorites. With limits, this line is specific. You can see here order valid for, where we said how many days the limit is valid. 1 means 1 day, 2 means 2 days, and so on. Well, that's all for this part, and see you again at the third part of our trilogy.